Hello and welcome to this week's Intelligent Wealth podcast. I'm very excited to welcome our guest interviewee this week, who's Pieter Slegers of Compounding Quality. I hope I got your name right, Peter.
Yeah, that's correct. And you're one of the few people who managed to pronounce my last name correct. So thank you. And it's an honor to be here, Tony.
Great stuff. Okay. Now, Peter, I've been following Compounding Quality as a subscriber to your own Substack weekly, or not just weekly, several times a week blogs on quality investing called Compounding Quality. I think it's absolutely amazing what you do. I'm a really big fan of yours. So I'm really delighted to have you along today. I really appreciate you giving up your time because I'm sure you're a phenomenally busy man based on the output, unless you've got a brilliant team behind you as well, which I hope you have. Either that or you must work all the hours God sends. Anyway, so just to kick off with, Peter, I just wanted to ask you just a little bit about your background. I think listeners quite like to know, what was it like growing up? What kind of class background did you come from? Low, middle, high class? You know, that kind of thing. And did you go to university? What did you study? Those kind of things.
Yeah,
What
sure.
can you tell
That's
us about
interesting.
yourself?
And thank you for the introduction. You've been really, really kind. And I'm always very happy to make some time and hopefully to help at least a few people who listen to this podcast. Now, to talk a bit about my background, well, my first name is Pieter, live in Belgium, near Antwerp. So not an US native speaking or English speaking, native speaking in English for me. Yeah. But really happy to be able what I'm doing right now. I think when you look at the journey, I actually started investing at the age of 14.
14?
Yes. So basically what happened, 14 was the first year I did a summer job as a student, obviously. And what I did is I was basically working in a factory, working in a factory, basically all the respect for people who do this kind of jobs, obviously. But I didn't really like the job. And as a result, I was really afraid to go and graduate after a while and go into the working field, because I thought, okay, if I need to count down the hours every single day I'm going to work, as I did when I was working as a student, well, then I will have a very hard time. And that's actually during that first job I had, a friend of my dad actually was talking with my dad about the stock market. And he said, well, it's an easy way to make money. You don't need to do anything, and so on and so on. The classic sayings probably. And me as a 14-year-old kid, I thought, oh, earning money or making money without having to work for it. Well, that's something for me, which is probably a very funny story and obviously very naive, because investing is hard work in the end. I think we both know that.
Yes.
But yeah, that's actually how my story started. So I started investing at the age of 14. I set up a brokerage account. I transferred all the money I earned that summer to my brokerage account. After a few weeks, well, the brokerage account was set up, and then there was only one problem, or two problems. First thing is I didn't know anything about the stock market. So I didn't know anything about the stock market, about the economy and so on. And as a result, I also didn't know, well, which stock or which stocks should I buy? And quote unquote, well, luckily back then the broker I used added a new stock to the topic list. And I, once again, very naively thought, okay, those guys know what they are doing, so I'll put all my money in that stock. Obviously, completely wrong, no diversification, didn't make my own homework, didn't understand the company I was buying. And you can probably already guess the result. Well, after 1 year, I sold the stock. And I sold the stock with a loss of 60%, so minus 60%. And I always say to people, well, that's the best investment I ever made. And that's the best thing that could have happened to me.
Yes.
because I think probably when something like that happens to you, well, you can do two things. The first thing is you can give up and say investing is nothing for me. And you already asked it in your question. Did you grow up in a middle class, upper class, lower class family? I think I grew up in a very classical family, in a very traditional family, middle class, and everyone was very risk averse there. So also the stock market was dangerous and you shouldn't do that. And you should put your money in a savings account and so on and so on. So that's also exactly what happened to me after the first investment. So at age 15 back then. Then my parents told me, look, I told you, it's risky. It's gambling. You shouldn't do that. You should put a savings account and so on. Luckily, I was a bit stubborn and I didn't listen to them. So after that first investment, well, obviously it's very painful. And I said to myself, how could you be so stupid and so on and so on. But that's when I really got seriously into investing. And I told myself, well, I'm just going to make sure that I'll never make such a stupid mistake again. I'm going to educate myself, read books, and so on and so on. And that's actually how my journey started. So since then, I don't know how much you can see a few in the background, but probably a couple of hundreds investment books and keep learning all the time. I think that's the beautiful thing about the stock market. And in that sense, I also think that I'm quite lucky in the sense that I love to read. So usually first 2 hours of the day, I just read a book, and that helps you tremendously to keep expanding and keep growing. I'm not sure when the podcast will be published, but right now in August, I'm now reading my 55th book of the year. So
really good.
That helps. And then to go back to the story about how compounding quality started a bit, started exploring the stock market, started learning. Then I went to university, and to be honest, as a kid, I always wanted to become a teacher. And when I needed to make a decision about which kind of thing to study at university, I was in doubt between choosing for lecturing or following my passion for the stock market. So I chose the passion for the stock market, did an MBA, or the MBA variant in Belgium. And after that, I actually started working in the asset management industry, was involved in daily management of a thematic equity fund, long only, rather small one in a broad perspective, around 200 million assets under management. But when I entered the industry, when I entered the asset management industry, obviously you had already read a lot about Warren Buffett, Charlie Munger, and so on. So to be honest, I was quite skeptical against the market or against the industry as a whole. And I actually also experienced that when I worked in the industry, meaning a lot of commercial incentives and so on. And I had a feeling that it was way more important to sound interesting than to be interesting. And in other words, it was way more important to have an interesting story to tell at a roadshow than to make or try to make intelligent investment decisions. So that was not something I wanted to do, I guess. And that's actually how compounding quality started. 100% anonymous in the beginning, given the job that I was doing. And I loved it in the sense that you were able to write what you think is the best for investors, generally try to do the right thing. And in that sense, well, I've been working full time in compounding quality for a year right now. And I love it. And I always say, well, today I'm living my best life and combining the best of both worlds, in the sense that you followed your passion for the stock market and you followed the stock market 24/7. And on the other hand, I also see myself a bit as a teacher, as you try to help other people to make better investment decisions. And that's something that truly drives me. And just also one thing I took away from the industry then is to honesty and integrity is very important. And we all know Charlie Munger, well, show me the incentive and I'll show you the outcome. I think that's a huge problem in the asset management industry in general. So that's what you try to do differently with compounding quality, to try and generally do the right thing. Put your money where your mouth is, so people can, for example, see the portfolio and all my investable assets are in there. I think it's very, very important to have skin in the game, and that's the case for companies you invest in, but also for yourself. And that's what I think that's in brief the story of compounding quality so far.
That's really good philosophy. What I'm interested to know, Pieter, is why you decided to go for this subscription model rather than create a fund yourself. Because I suspect, I could be wrong, I suspect you could personally make far more money out of running a very successful fund than from your current model. Although I do admire your model, and I'm sure it's a very good model and it'll be very good business for years to come. I don't intend to ever give up my subscription because you add an awful lot of value. I find an awful lot of value, far more than I ever pay in the subscription. So what made you go down that route? Was it because of your belief in this honesty and doing the right thing and having skin in the game, or what?
Yeah, obviously, I believe you do, Tony. I think you can have a fund and work in the industry in an honest and integer or in an honest way in general. I think regarding the subscription base, I think it was a good first good step to take for myself and for compounding quality. And I'm really happy that you're able to help other people right now. So right now there are almost 290,000 people on the list, so people who read the emails. But also, when I'm completely honest against you, and I actually had the discussion a few hours before we are talking right now, I think the next step also for compounding quality should indeed be to launch an equity fund. Once again, integrity, honesty. When you would do something like that, I think for me personally, I would like to structure it via the Buffett partnership structure. So no cure, no pay. So when there's no performance, you don't need to. There's no fee, basically. From a business perspective, you will probably make less money out of that. But I think it's the honest way to do. And obviously, administration, regulation, and so on, it's a tough thing in the industry.
Yes.
So that's also why, for me personally, I thought it was a good idea to take the first step and do a newsletter. And then the next step to take will probably be a fund. But I don't want to hurry things and do everything one step at a time. So launching a fund won't be for this year, for example. It will be a plan to look into it in the next 3 years, I think.
Yeah. When you were being anonymous, which you had to be when you launched Compounding Quality, because you already had a job working for someone else, so you couldn't reveal your identity. And I did tease you a few times about that, which is quite fun. But unfortunately, you got to the stage because you were using this Warren Buffett image that I gather that Berkshire Hathaway's lawyers contacted you and asked you to remove Warren Buffett's image, which I thought was quite amusing. But true to form, Warren Buffett, the lawyers are actually quite friendly, you said.
Yeah, exactly.
What can you tell us about that?
Yeah, sure. So basically, when I started Compounding Quality, it was just the intention was to have fun and to be able to say what I wanted to say about the stock market and investing whenever I wanted to say it, which I wasn't able to with my job. So I launched it, and it was just on a casual Friday night. I went to Twitter or X right now, thought for a second, 30 seconds, okay, compounding quality. Compound interest on the one hand and quality investing on the other hand, which is your investment philosophy. Next step was set a profile picture. I thought, oh no, I never thought about it. Obviously, I needed to stay anonymous. So just like many people, maybe Warren Buffett is your personal hero.
Of course.
Last year, I read everything he has ever said and written, 5,000-page document.
Wow.
So truly inspired by him. So obviously it's your hero. I want to stay anonymous. I thought, let's use a cartoon of Warren Buffett, because that was actually the profile pic. And I started reading and having fun on talking about investing. And then compounding quality kept growing and growing and growing. And all of a sudden, well, right now it has social media combined 600,000 followers across social media.
Wow.
But
amazing.
A few months ago, obviously the Warren Buffett cartoon logo was still there. And I already knew, okay, this is, maybe you should change it. But I was still anonymous, so I couldn't use my own profile pic. And after a while, the profile pic of Warren Buffett became so iconic and linked to compounding quality that it also became hard to still change the image there. And then indeed, I got a very friendly email. They were really kind from the lawyers of Berkshire Hathaway, or the law firm that Charlie Munger actually was a partner in. And just they got emails and they said to me, okay, some people are sending us emails asking whether Warren Buffett is involved in compounding quality, which is obviously funny, and I wish it was true, but obviously it isn't. And because of that, they asked, okay, can you please remove the profile picture and use something else, because we don't want to get people to think that Warren Buffett is involved in this, which obviously isn't. And then changed the profile pic, and basically it was a cartoon of Warren Buffett. He was looking something like this, so looking into the upper left corner. So I tried to recreate it with my own hats right now, just to recreate the image a bit. To be honest, I like the Warren Buffett picture more, also because right now my head is there, but I don't think that it should be about me. It's more about the investments, about the investment philosophy and so on. But it is what it is right now, and it has been an incredible experience, and I'm also obviously very happy that the way everything went, they were really friendly. We still exchanged a few emails afterwards. So it was a great experience in general, I guess.
No, I think that sums up Warren Buffett, doesn't it? The honesty, the humbleness.
Absolutely.
I feel that I get the impression, because you come across as being similar. You're very honest. You're very, you've got principles. You want to do the right thing, and that really struck me when I went to the shareholders meeting in Omaha, which you go to every year, don't you? I think.
Yeah, exactly.
And his humbleness is just incredible, really. His humility, rather, is just incredible. So I just like that. I think it's just a good way to live your life.
Yeah, exactly. And it's also, it inspires. So, for example, Warren Buffett inspires other people to be the same way. So he created a lot of wealth for a lot of people. And on the other side, he also inspired many people to just live a very humble and kind and live in a kind way. So that's amazing.
Yeah, because unfortunately, the fund management industry, it doesn't cover itself in glory, really. I get the impression that there's two. The problem is that there's these two incentives. There's this conflict of interest for fund managers. Most of them are publicly quoted, so they've got two customers to serve. They've got the investors and they've got the shareholders, and the shareholders always win. Whereas there are a few notable exceptions to that, like Vanguard, and in the UK we've got Baillie Gifford. Vanguard's a mutual organisation, and Baillie Gifford is a Scottish partnership. You're talking about a partnership, and I quite like that, because the focus then is on getting great returns rather than just simply accumulating assets under management. Because if you can focus on the great returns, the funds under management will just happen anyway. But unfortunately, it's around the wrong way. Back to Charlie Munger's incentives, isn't it? Incentives are all wrong, unfortunately. Maybe that's why I thought maybe that's why you had the subscription model, because you had the same kind of
and
incentive.
That's also, I got a lot of remarks from friends, family, people in the industry and so on, who said to me, well, for example, with compounding quality, I'm showing my portfolio with 100% transparency, and I also say all my money is in there. And a lot of people said to me, you shouldn't do that. You should just give a buy, hold, and sell list or something like that, because we all know that every active strategy from time to time will have tough times and will underperform the market for a while. And when you show your portfolio, people can see that. They might see, oh, he's not as good as I thought he was, or he's not able to outperform the market, and so on. But to me, it was really important to show the portfolio. Why? I'm running a newsletter. I'm running a subscription-based business model. There is a fee to look at the portfolio and so on. And when in the very long term, because obviously a track record of at least 5 years, preferably even 10 years, when you're not able to do better than the market, well, my opinion was in that case, you have no right to ask money for that, to ask a subscription fee for that. And you could better go fishing or playing golf or whatever. So once again, I think it is the most proper or most fair way to run the business. Same for the fund. I think the Buffett partnership structure, no cure, no pay, is also a beautiful
I agree.
business model.
Yeah, totally agree. I think it's the right way to do it, definitely. May I ask you, Pieter, it's not just you, is it? You must have a team, presumably. Other that, or you work 168 hours a week.
The funny thing is, until 2 weeks ago, it was just me. And I actually was, I don't know, I'm having fun. So you do what you love to do, but probably working 70, maybe 80 hours a week.
It's a lot,
So it has been so much fun, and I'm truly enjoying this.
Yes.
And 2 weeks ago, someone joined the team to help me assist with preparing investment cases, analyze the results, or the earnings call transcripts of some companies. So it's interesting to have him on board, and it also helps. I could maybe be seen as a bit of a traditional value. I'm investing in quality stocks. But I have a bit of a value investing mindset in the sense that I lived in a quite a frugal way in some way. And I always thought I have some problems to spend money. I don't want to spend a lot of money. I want to invest as much as possible. So when I would hire someone that costs money, it's money I can invest and so on. So for me, this has always also been a learning experience.
Yes.
And obviously, you need to work with a team. You need to have great people on board. And that also gives room and also gives opportunities for other projects, like the fund example, launching an equity fund, for example. So I think it has been amazing. I'm really happy that someone joined. And let's see how everything will evolve in the future.
Yeah, you can't do everything yourself. You eventually have to delegate, but just always make sure you only recruit fantastic staff.
Absolutely.
You know, I think it's the old saying, isn't it? Recruit attitude, teach skill. You know, that's always been my philosophy. It does pay off, because when you think about it, the companies you're investing in, the great companies have got great employees, haven't they? Because that's what you're investing in, really, aren't you? Investing in people.
Absolutely.
Really, because that's what companies are. They're people, aren't they? And most talented people will give you the greatest results. So pretty important. Because that's one of the things you do take into account, isn't it, when you assessing companies?
Yeah, absolutely.
Glassdoor, I think. Do you use Glassdoor?
Sometimes just to look at Glassdoor and the employee ratings, and like 70 to 80% is invested in owner-operator stocks. So companies where
I love that idea.
The founder is still involved, or family companies. And I think the same goes for employees. I think definitely for hiring the first employees, it's almost like marriage, and it will be so important also when under a situation where a team will grow. When you hire an A player, they will be good, and when he needs to hire someone, also you can make sure that it will be good. But when you hire a B player, maybe the B player will hire a C player, and the C player will hire a D player. So I also heard that from a lot of people, the first person or the first few persons you hire, it's such an important decision. Once again, they're probably inspired by Warren Buffett, Tony Byrne. Integrity is the most important thing. And you said, hire for attitude, and skills can be learned. I think that's exactly true.
Yeah. Yeah, I couldn't agree more. And also the other thing I find, Peter, is that too often these large companies just keep employing more and more people. But Warren Buffett, I read a biography of his about 10, 15 years ago. And at the time, he was only employing 10 people. And I thought, this is one of the richest men in the world. And it just goes to show, if you employ 10 quality people, it's probably better than employing 100 very average people.
Exactly.
You don't need to have lots of numbers. Small teams, but quality teams seem to be the answer. I was going to ask you what I usually ask my guests: what are your interests outside of work? But it sounds to me that your main interest is your work. You love what you do. I mean, do you get time for hobbies? Do you get time to do things? Do you have any spare time?
Yeah, sure. So obviously, reading is a hobby, which definitely helps as an investor. And for the rest, I really love I love sports in general. So
that's good.
It has been a while. I think 2 years ago, I ran my first marathon.
Oh, excellent.
So that was amazing. I also like to ride from a bicycle. So cycling.
So you run and you bike. That's your
exactly.
main physical sports.
Exactly.
Do you mind me asking, what was your time in your marathon? Did you do well?
It's a dangerous one. I trained quite well for 3:30, and I end up with 3:57. And for people,
3:57.
Yeah,
that's still good. I mean, believe it or not, Peter, I ran 46 marathons from my early 40s, and I'm now in my mid 60s. I haven't run a marathon for 7 or 8 years. I've given up marathons because I sustained an injury. But my fastest ever time was 4 hours, 10 minutes. So I admire if you broke 4 hours. That's still a great achievement.
I made a very classical mistake in the sense that my trainings went really well. I was ready to do the 3:30. But I did one thing. I never exercised. And maybe you can already guess it. I didn't take the food into account. So the day before the marathon, I ate way too much. The marathon itself, I started using gels for the first time.
Yeah.
And my stomach wasn't taking it, causing the problems.
My first marathon was a disaster. It took me over 6 hours, London Marathon.
Most important thing is that we do it right, or we finished it.
Yeah, but anything under 4 hours gets my respect. That really does. But 3 hours 15, you're an elite runner as a male. 3 hours 15 for a marathon, you're an elite runner. So I'm sure you could do it one day.
Yeah, running that many marathons as you did, that earns my respect. So kudos to you.
I did a lot of very interesting ones. Very interesting. But that's not about me. Let's not talk about that. I'm just going to ask you something. It's a bit personal, but it's not insulting. Do you have time for a relationship? Do you have children, a family, or not?
I have I'm 27, about to turn 28, so probably still relatively
quite young still. Yeah.
I have a relationship, a healthy relationship, I guess. No kids, which obviously definitely helps.
Yeah.
To work these kind of hours.
True. Yeah.
So everything is going fine, but also with 100% transparency, finding a good work-life balance is something that's definitely difficult, and maybe the thing I'm struggling the most with right now, just because you love what you do. But some people will probably have read, for example, the 7 habits of highly effective people. I think habit 2 is start with the end in mind. Well, what matters the most at the end of your life, when you're 80 years old, and hopefully we can all turn 80 years old, is just your family, your friends, how much love you receive, how much love you give.
That's true.
So I think that's something that's really important to keep in the back of your mind, and to not neglect the things in life that actually matter the most in the end.
True. It's very true. But I do relate to you, because even though I'm in my mid 60s now, I still work quite a lot of hours, and I do not just work in financial planning and fund management, but also I do a lot of reading, but I do a lot of writing as well, and podcasts and videos and blogs. I just enjoy it, because I find the more you educate others, the more you learn. There's a saying, isn't there, about teachers? Teachers, you learn by teaching, isn't there? You learn more by teaching.
Absolutely.
I think that it's very enriching. Being a fund manager, I didn't realize it's so enriching because it's not just about analyzing stocks, is it? You have to learn so much about the world that it's perpetually fascinating to me and to you, that you're always going to be a learning machine, and it just complements, reading and studying. It just complements it all, doesn't it, really? It helps you get there. So can I ask you, I was going to tease you about this, your friend, is it Luke Kreutzer?
Yeah, look who is indeed.
Yeah, I know I've teased you about not about your anonymity before, but is Luke Kreutzer actually a person, or is it your alter ego?
No, look who's is actually a person, and he's a great friend. And I always laugh with it. And that's we published The Art of Quality Investing, the book, 3 months ago right now.
Yeah,
I always laugh with him in the sense that I say, well, what Graham is to Warren Buffett, you are to me. And
yes,
obviously Graham and Buffett, they are playing on a way higher level than we are, but just to get a comparison there, in the sense that Luke taught me in the beginning
yeah,
a lot about quality investing. And maybe that's interesting to get some background. Basically, when I was graduating at university, I went to work in the asset management industry. I suffered, like many people probably, from home biases,
yes,
meaning that actually the majority of my portfolio was invested in Belgian stocks, in my case,
yes,
which is not a good idea at all, but because there aren't that many good Belgian stocks. But when I joined the industry, contractually, I wasn't allowed to own any Belgian company anymore. The reason for that is that those are rather small companies. The liquidity is low. So what we could do with the funds
yeah,
is front run or influence the stock prices. And from a morals perspective, obviously, it wasn't a good idea
yeah,
to own those kind of companies. But for me, that also meant that I needed to liquidate almost my entire portfolio and look
yes,
for another investment strategy / philosophy. And that's when I really start to make the switch to quality investing. Basically, it immediately sticked. And now we published a book about it, The Art of Quality Investing. We have also Quality Investing from Rollins Cullingham, Only the Best Will Do, How to Pick Quality Shares, and so on. So excellent books. And since then, I've basically been talking with Luc every single day about quality investing and sharing investment ideas and do that. And it has been really insightful. I think that's also in
yeah,
general the case also with the community on compounding quality, for example.
yeah,
Discussing investment ideas with other people and talking with
mm.
people who have the opposite view as you, for example, it's so insightful and you learn so many things.
You,
So that's something
you,
I definitely love.
you clearly have studied Ray Dalio then.
Absolutely love the
Yeah, because Ray
principles.
Dalio talks about having thoughtful disagreements with open-minded people. I quite like that, because we don't get much of that these days, do we? To be able to talk to someone with a different view to you, but do it thoughtfully without having to do a character assassination, because that seems to be the trend these days,
Yeah,
certainly online. I
exactly.
quite, I think I do like that. I do like the ability to debate things, even if someone's got a totally different view to you, because you might learn from it. And as Ray Dalio says in his one of his books, he says, we've all got blind spots, and it's keeping that humility to recognize you've got blind spots. You don't know everything. I think we all need that. But what I find quite interesting is Luke Kreutzer seems to have a very low profile compared to you.
Yeah, exactly. So probably, like I said, we are two friends. In the sense of our character, we are probably the complete opposite, meaning that
Yeah,
obviously with compounding quality, you have some exposure, you do seminars, podcasts, and so on once in a while.
yeah.
And Luc really likes to stay under the radar. And
Ah,
for example, we live near Antwerp. He lives 30 minutes away from me. And we go on a walk regularly and share ideas, talk about the stock market and so on. But when you ask him, well, let's bring person X and person Y and go for a walk with 4 persons, then he already says, well, it's a bit too much for me. I really like under the radar, one person max, and talk about investing.
Yeah,
It's lovely, and it also obviously helps you to, for example, like many people say, stay away from Wall Street and just make your own homework. I think Luck is doing that in an excellent way. And also in general, like it completely resonates with me when you stated that it's okay and it's really good to have opposite investment beliefs and ideas and so on. But it's so important to have respect for each other. And
agreed. Yeah.
for me, for example, I'm more in the quality investing camp, but there are multiple roads that lead to heaven, and growth investing can be a valid strategy, and value investing can be a valid strategy if you execute it in a structured and rational way.
So may I ask you, do you consider Luke, or is it Luke, more of a kind of mentor to you?
Yeah, like saying he's the Benjamin Graham to me. So he's definitely someone who is a mentor, someone I look up to as well. His track record is also excellent. So also kudos to him there. Also in general, I think it's really important to have great mentors in life. And the beautiful thing about the world we live in today is that just in the back, you can have a mentor in any book, basically. And Charlie Munger and Warren Buffett can your mentor, but can be a person you know in real life. Just by reading books and a few mouse clicks on the internet today, you can read so many interesting resources and learn from the best people in the world. And I think that's amazing. Like you mentioned, become a learning machine. And that's also what keeps us young. I don't think it will be any different when you're 70 years old or 80 years old. No. And just to keep learning, because when you stop doing that, well, the aging process will probably accelerate very sharply.
That's a good point. What brought it home sharply to me when I was in Omaha was that Charlie Munger, who professed to never exercise in his entire life and never watching what he ate, he lived till he was 99 years and 11 months, and he was a voracious reader. And Warren Buffett will probably live a similar life. He's 94 and he reads a lot, like something like 500 pages a day. And it just goes to show that, like exercise is to the body, reading is to the mind. And it goes to show that probably keeping your brain active is more important than keeping your body physically active, because they're living proof, the two of them. They're not the world's greatest fit men by any means, but what incredible brains they've got. And isn't that wonderful to think you can follow your passion and maintain your brain so well for a long time. So, because you're quite, I'm surprised you're even younger than I thought you were. I thought you're probably in your 30s, but you're a very young man. That's really great that you're doing so well. So what are your goals for the next 5 years? Where do you see yourself in 5 years' time?
Sure. Maybe to a short comment on what you just mentioned. I agree with you. Having a purpose in life is so important. And that's also one of my internal goals for the next 40 years. So not 5 years. But just to read at least 52 books a year. And when you can do that for 40 years, well, you've read over 2,000 books. And I think I don't consider myself as the smartest person in the room. But when you do that, well, you can't help but become very wise, I guess, when you read over 2,000 books. So that's definitely a goal. Well, in 5 years from now, I think most important thing is just to have fun and generally try to do the right thing and help other people. I think that's one of the key things to lead a happy life from a professional perspective.
Yeah, couldn't agree more.
And then for the rest, the newsletter, obviously, the more people read it, the better, I guess. The happier I am, the more people you can help, the better. And then the other part, well, another goal, an equity fund is definitely something that's on the
makes sense.
On the bucket list, or on one of my goals. And I think 5 years might be an excellent framework to achieve something like that.
Great, that's really good. Well, I wish you all the best of luck in all that, Pete. I'm sure you'll achieve massive success. You already have done. So I'm really very impressed with what you've done so far. And I don't see any reason why you can't continue down this road of success. So, unfortunately, I've got to bring the interview to a close now, but it's been an absolute joy to interview you. You've enhanced your image even more now. I think you've got absolutely the right approach to life. I fully endorse it. And I think you're set to have a very successful career going forward. So all I can say is thank you for your time today.
The honor was all mine.
And I really look forward to meeting you one day. I'm sure we will.
Absolutely. Let's make it happen in Omaha next year, hopefully. And that Warren Buffett is still there. And for the rest,
maybe if you come to Belgium, to London, or I come to Antwerp, we'll meet up. I'm sure we will.
Absolutely.
Anyway,
perfect.
Thanks for your time. I really appreciate you. You're a busy man. And have a great day. And see you soon.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.